Hello, everyone. It is my great honor to join the Business Blockchain Expo hosted by BINARYSTAR. And my name is Pan Jun. I'm from Ruby Capital. I'm currently in charge of the fund management and business development. Today, my topic will be around the trend of decentralized financial market and crypto asset management. For the record, this is not investment advice or financial advice. First of all, let me share some about Ruby Capital. Ruby Capital is a licensed fund manager based in Singapore, which focuses on uncovering the unique investment opportunities arising from the blockchain industry. We are committed to helping the earlier ventures to succeed and excel in the competition. The team of Ruby Capital consists of various experienced professionals in both blockchain and traditional financial markets. We believe by leveraging our expertise and business network in the market, we can further help our ventures to grow and expand. We are continuously expanding our coverage in the verticals of the blockchain space, which covered from the centralized exchange, public protocol, till recent decentralized finance ventures. In early 2020, we have noticed the market hype of the blockchain market shifting to the decentralized finance sector. With reference to the statistics, the total value locked, meaning the capital flowing into the decentralized finance application, has been increasing from the $660 million in January of this year till $12.81 billion as of in November 2020. This representing a 1,900% increase since January. The rapid growth of this sector has drawn our attention. Since then, we have actively joined the projects ranging from the decentralized exchange called DEX, lending development tools, financial derivatives, and crypto asset management. Along the way, we have been engagement with several leading DeFi projects like Serum launched by FTX, Ram.DeFi, Horizontal Finance. In the current DeFi market, we have seen a number of products offering different ways to either track, manage, or hedge exposure through a suite of various DeFi projects in the lending, DEX, and decentralized financial derivatives. And we'd like to also give a DeFi ecosystem overview. The DeFi ecosystem comprises a variety of blockchain-based financial service applications. As we mentioned from the DEX infrastructure, lending projects, as well as the DeFi asset management. And today I would like to discuss further with asset management in the decentralized finance market. This is particularly exciting and interesting as the new ways of managing assets is coming into the picture. In the past, we have been in traditional finance world, and we have been exposed to financial products like hedge funds, structured products, saving programs. We are also taught to plan capital allocation per individual risk characteristics and discussion with finance advisors. We have also been pitched by various financial vendors like money managers, fund companies, private investments. The potential of decentralized finance application is upcoming to be realized in DEX, decentralized derivatives, yield aggregations, and how they can be combined to create new asset management solutions for investors, shifting from the traditional finance world. Moreover, in the traditional asset management model, financial institutions like BlackRock Asset Management or financial expertise tailor an investment portfolio solution to their clients based on their individual characteristics. This process is controlled by asset management companies, and investors have considerably limited access to their own funds, while fees must be paid to the intermediaries for advisory services with limited transparency. In summary, investors in the traditional finance model have limited independence and autonomy over their own assets. which is also subject to their managers. So that we're excited by the DeFi prospect that crypto asset management has come to reinvent the way of investing. The objective of the DeFi asset management is to make investing more affordable, easier, and more accessible, reducing the need for the managers and eventually to get rid of the intermediary managers. DeFi asset management products are non-custodial and accessed via users' own crypto wallets. Note, those are not exchange wallets, meaning users do not have to share their private keys or transfer funds, but transactions are routed on smart contracts to be finally settled. These services are also automated, including rebalancing, collateralization, and liquidations, which takes place following the product design automatically, but subject to the performance of the underlying protocol. In most cases, under this topic, we are discussing Ethereum-based decentralized finance applications. In addition, the core of the DeFi asset management is a decentralized technology implemented for development, which boosts transparency of the transactions. In the past, the traditional finance world, transparency is somewhat difficult to ascertain due to the non-real-time reporting cycles. Many fund managers only have to publicly display their holdings once a month or once a quarter, and also subject to a 2 to 3 day settlement periods. This means we may not know exact holdings of the manager when we make the investment decisions. In DeFi asset management, we are entitled to up to the block visibility into the holding of the crypto assets, as well as a performance accordingly for a crypto asset management product. So now we can access to the on-chain data via Etherscan anytime to verify transaction details for Ethereum-based decentralized financial applications. Another exciting aspect of the DeFi asset management services is a composability feature, meaning that investors are given autonomy to build their own portfolio, with more room for personalization around liquidity, income, and growth, but which are also adding barriers for non-sophisticated investors at this moment by being implemented in a decentralized way. The industry is also working to address those barriers of access in the evolving pattern of asset management. The most important part is that all these benefits will be accessible globally. Anyone will be able to manage their investment regardless of locations and time zones. Under this context, we do see increasing need of the compliance regulation in this field to make the healthy development of this industry. I also like to share some notable DeFi asset management projects. Let's say DeFi Zap, or now Zapper.fin. First changes the game with the ability to allow users by participating into multiple yield farming pools, layering exposure, returns, and allocations management at a one-stop interface. The users are enabled to exceed the investment in one transaction subject to their choices. There are more incentive programs, yield farming programs being created, and more ways of deriving capital income with or without leverage. Hedging is also applicable subject to the particular service or products. Zapper highlights the address and the need of making the investment process simpler and allow users to participate in the portfolio of multiple tokens while managing their risk losses. Another project will be like RAY, R-A-Y, Robo-Advisor for Yield, has also brought a new form of asset management into the market, which allows users to receive an overall higher return on the general low-risk lending investments by optimizing users' capital allocation among selected lending protocols. RE allows users to deposit the various classes of stablecoins like DAI, USDC, and even BUSD. Therefore, this will save the currency discrepancy for the users, and especially for the no-risk profile investors to best market returns over the stablecoin holding. And stablecoins are always a gateway for institutional investor or traditional investor into the crypto world. And currently, RE offers DAI deposits annual return at 5.4%, USDC deposit annual at 6.2%, and BUSD deposit annual return at around just 1.9%. Another important and milestone project in the DeFi space is Yearn.finance, also known as YFI, which I would like to briefly go over. Actually, Yearn is a liquidity aggregator providing automated yield farming strategy through a number of lending protocols. So YFI shifts capital between the top DeFi lending protocols like Compound, AA-Wave, and DYDX, ultimately geared at providing lenders the best return on liquidity. Yearn.finance began its operation in February 2020 with another project known as Yearn.finance. Going further, Yearn was rebranded by Yearn by Andrew, the founder. The Yearn soon has a few capabilities added to its Asana. Yearn.finance is a DeFi platform where users can deposit and stake their ERC20 tokens. In return, they receive daily interest. This is made possible by allocating the capital to staking pools, offering best returns across the network. Why was so revolutionary? Before yield farming got mainstream, users had to stake individually with each protocol, having to learn about many projects. Using Yearn project, user didn't have to flip through multiple DeFi sites to get yield farming projects and profits. Yearn solved the problem by integrating many different blockchain protocols. So you only have to stake tokens once with Yearn and to get access to many interest-yielding blockchain protocols. To maximize profits, the Yearn protocol continuously rebalances as yield farming opportunities shift. Another possible sector is about synthetic assets and real-world assets. The growth of protocol like synthetics and UMA are creating the ability to mimic off-chain assets while keeping all management on-chain. This is seen in assets like foreign currencies, oil, and gold that are currently available in synthetic forms on Synthetics platform. Some upcoming DeFi project is looking to use UMA to create a crypto-linked S&P 500 index, which replicates the movement of the fund index to include traditional finance assets, funds, and indexes into the crypto world. Other DeFi projects like the Hedge SETS protocol are working towards a similar objective of linking the real-world securities and commodities within the crypto ecosystem. Synthetic representations will allow investors and fund managers to create exposure, hedges, and diversification across traditional and crypto assets. This can be extended with the relation to security tokens. As more real-world assets are tokenized and placed on-chain, we may see DeFi products that include real estate, hedge fund shares, and private companies. This is like what DMM and Persistence are working on. These assets come with different income and growth mechanisms, which can be further examined and tracked via the transparency of Ethereum. Also, the potential of the mass adoption and bridging the masses. The DeFi asset management projects offers the possible access to those groups not well served by traditional financial institutions for opportunities to conduct investments via crypto-linked products, and also for investors who are looking for more alternative investments via crypto products for capital allocations. In addition, those DeFi asset management projects also eliminate the barriers in the intermediary levels and allowing even simpler investment decisions. For example, if investors prefer to stay more passive and can choose to directly deposit the USDC into the saving projects, now the general yield for USDC deposits is around 3% per annum without any leverage. Also, please note, USDC is a compliant USD-backed crypto with one-to-one fiat-backed support. And the return shall be much higher than the banking deposits and offering much flexibility in redemptions. Moreover, even some small amount of cryptocurrency, like stablecoins or Ether, can be investing and growing with the DeFi asset management projects in a trustless, non-custodial, and transparent manner. This is outlining our prospect to the ecosystem. And I would like to also share my thoughts regarding the Japanese market. I think there is always strong potential market for the DeFi asset management. And as some reporting has been conducted in the past, in 2018, per IBINX, a cryptocurrency exchange software provider, there is a total of 3.5 million active crypto traders in Japan. Around 30 to 50% are retail traders. And approximately this is around half of the global active traders. And the cryptocurrency trading volume originated in Japan takes up to 60% of the global trading volume. According to a report published by The Block in 2019, Japanese market takes around 10% of the total volume of global cryptocurrency trading, ranked at number 2 destination of crypto trading just behind US, which takes 24.5% of the total trading volume. And per Zango in 2020, the number of active crypto users in Japan have been witnessing an increase of 30.4% from September 2018 till December 2019. The growth of the Japanese crypto market is expected to continue in the coming years, and DeFi offers another path for the Japanese crypto traders and investors. Why DeFi asset management is good for the Japanese market? We have seen the no interest rate environment continuing as recent 10-year Japanese government bond was offered at 0.03% annual return as of on 27th November 2020. DeFi asset management introduced the new way for managing assets by depositing or investing on the stablecoin basis, rather than the past will be based on the token specifics. Rather than taking an proactive approach in the token trading, this alternative yields a better stable return at around maybe 3 to 5% for USD-pegged stablecoins, which is attractive for risk-adjusted yields. This is different like lending. For example, back in October 2020, Line, the Japan's messaging giant, has announced to launch the lending services on Bitcoin, BCH, Litecoin, Ripple, and Ether via its subsidiary BitMEX. Line lenders will be able to obtain yield of the assets and borrowed for a certain period. However, in this way, for new crypto users, they may need to convert fiat to Bitcoins and Ether first to participate, which has also exposed them to the coin fluctuations. Therefore, the stablecoin deposits within the DeFi asset management projects are much better for new users and getting exposure to the yields. And actually, this is all my sharing today, and I believe this is just the start of the DeFi asset management fields. And we will see much more innovations coming to the picture. And we will also see another edge on how traditional finance companies to integrate with decentralized finance applications and jointly offer hybrid investment solutions. In addition, we'll also like to see regulation compliance coming into the industry and help the DeFi industry to grow further. So thank you, everyone. And this is all about my sharing today. Thanks.